Good morning, everybody. Welcome to 2024. Happy New Year to you all. Hope you had a good holiday break. Hope you're all rip roaring and ready to go for this new year. So, welcome to 2024, everybody. Happy New Year, Paul, and all the other guys and girls out there in the chat. Hopefully, this is going to be another good year for trading. There's certainly probably going to be plenty of volatility to come. Not least with all the central banks that are going on, which we look forward to in the early part of this year. Right, let's get cracking into some of the bits and pieces going on. Bit of data we've had out over the last few days, final PMIs and some first PMIs. China, the Beijing manufacturing PMI coming in better at 50.8. Their other manufacturing PMI, the MBS one, which is the one run by the National Bureau of Statistics, still sitting in contraction, I think 49.9 or 49.5 or something. But this one moving further into expansion there. Eurozone PMIs, these are mainly all the final numbers except for the likes of Spain and Italy, which are fresh numbers. Coming in worse, Italy coming in a little bit better. France on the final numbers coming in a little bit better than the flash number 42. It's all there or thereabouts. Nothing really to get too excited about from any of these. Germany a little bit better than the flash number and improving on last month as well. But as mentioned, these are all final numbers, so it's only a little bit of tinkering around. UK a little bit worse on that one. Staying with China and Premier Xi with his New Year's speech says he's pledges to strengthen the economy in 2024, said that they do face some headwinds. He also spoke a bit on unification with Taiwan. That's one of their aims still that's front and center. We do have Taiwan presidential elections in 2 weeks. And a few Chinese officials have been sticking their oar in, shall we say, and saying that the people of Taiwan should vote with unification-related parties rather than parties who will keep Taiwan independent. The DPP party, who are independence party, are likely to win that, or their favourite to win that, but that's something that could play into some of the geopolitics early this year if there's any upsets in those elections. If parties win that want unification with China, that could create a few tensions there, so one to keep an eye on early part of this year. Over in Australia, central bank had one of its pieces out. Sort of a survey that they do looking at the effect of interest rates. They said that meetings with industry and community groups suggested that rising prices and higher rates are weighing on consumption and the broader economic growth. That was for surveys that they ran from September through to November. So the fact that pressures they were facing, rising prices and high interest rates, well, you can't do one without the other. So if they want to combat rising prices through further rate hikes, then they're going to add pressure by raising rates. So it's a bit of a rock and a hard place for the RBA is what they continue to combat. Do they continue to combat higher prices or keep rates where they are and maybe then look to start to ease a bit to help the economy that's suffering from those higher prices? We shall wait and see. PM Albanese said that the government is potentially aiming to provide additional relief to households to lower their living expenses. But as he pointed out, that can also be inflationary. So they're looking at ways of helping cost of living pressures in Australia without stoking too much inflation. Good luck with that one. Coming back over to Europe, ECB's de Kos, one of the first out this year, saying that the timing of ECB rate cuts depends on the data. We also got the US S&P Global PMI, if I can find it, where it is. Where are we? Boom, 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 boom. There we go. So again, final numbers, and we start to get all the ISMs this week as well. 47.9, so much worse there from the PMI in the US. Not much on the news front coming out. Obviously, you're having this terrible news of earthquakes in Japan going on as well. So it's on a market-related front, it's not had a huge impact. Those quakes are still ongoing, though. I follow one of the earthquake sources on the social media, and it seems like every 5 minutes there's another tremor popping up in Japan. So just one to keep an eye on. Hopefully things, or we're over the worst of things there in Japan, because obviously they can suffer with those earthquakes over there. So hopefully nothing more untoward than what we've already had. Ali just asking, events in Japan can have a negative effect or positive effect on the yen. Okay, the airport thing is not market related whatsoever. What you have to look for with regards to the earthquakes, it can force a lot of people to repatriate funds back to Japan. Insurance companies and the like who invest elsewhere may have to pay out, so they repatriate money back into Japan, which obviously means yen strength. We're not seeing any of that at the moment, but if something big, unfortunate happens, then that's what the type of effect we'll look for in terms of what may happen with the yen. But let's hope not. No one wants to be trading those sorts of disasters or the back of those sorts of disasters. Other geopolitics, we've had all this stuff going on in the Red Sea, a pickup of activity there. The US bombing some Houthi sites, defending against attacks on ships. Iran has moved warship to the Red Sea, so that is still bubbling there, and that looks like it might be picking up a bit as we come into the new year. Firms like Maersk continue pausing all cargo movement through the Red Sea. Gavin, just going back to that, that happened with a big tsunami. It happened in Japan when we had that big one, and yes, we saw a bit of movement into the yen. Really, that's all I've got coming into the new year. A bit light on any major headlines, data, and the like, but we do have a big week, fairly big week upcoming on the data front. We've also got Friday kicks off, get right stuck into it with the jobs report. So it's double bubble between that and the Canadian jobs report as well. But for today, we have the ISM manufacturing later on. So as said, we get stuck right into the data in the early part of the new year. Jolts as well, keep an eye on that. Had a big move last time, which got the market moving as well. So we'll keep an eye on that one, as it still is lagging data. And as said, because we have that jobs report on Friday, market focus is going to be on that one more so than the jolts. But in these early trading days of the new year, the market likes to find its feet a bit. So we get to see whether the market's going to go back to trading data, how it's going to set its stall out. Have we finished pricing rate cuts for the US, for the Fed for the moment, which means that we're just going to be swinging around with the data points and how those affect those rate cut trades. If you look at something like dollar yen, obviously there's two things going on there, but we've seen some big moves in dollar pairs like dollar yen selling off into the end of the year, and then we're seeing it bid in the early part of the year. So lots to decide, but it's going to be a bit difficult to get a full gauge of the picture, but we'll look to see what some of this data does for the dollar, and then we can take our clues from that. Then on Thursday, we get some more PMIs coming out as well, final numbers as well, services stuff for those PMIs. Get some CPI data coming out as well. As you can see there, 1 o'clock, we get the headline German numbers. That means we get the regional numbers coming out in the early part of the morning in Europe. tomorrow. So we'll get to see whether Germany's seeing further falls in inflation. ADP as well, coming in a bit later, usually on a Wednesday, but obviously for the holidays, it's coming out a day later. That will give us our clue into the NFPs as some in the market take it. That's reminded me I better get the NFP competition up and running for the first part of the new year. Some retail sales data from Germany on Friday. Eurozone flash CPI numbers going to be really important just to see what's going to happen with inflation. A lot of ECB bods expecting inflation to pick up in the next few months, beginning of the year, just as some of those price pressures coming in from energy into the winter and so on and so forth feed back into pricing. So we'll see whether that's maintained or not in this number, which obviously be for December. That 2.4 reading we got last time, very low. Can we see inflation perhaps pushing down to the 2% mark, closer to the ECB's target? So that's, as I said, that's going to be a big one to watch on Friday. They said got the jobs numbers there, and then we finish off with ISM services, which is the bigger number actually than the manufacturing number, because obviously services is a bigger part of the economy these days in a lot of places. So that's what we've got coming up this week. So let's have a look at what's been going on. So obviously looking at a few pairs, we did get some year-end moves. We had euro dollar spiking right up to the 111s, nearly 111 and a half. On that, but it's all washed out. So we've had all the end of year stuff coming in, going out, whatever it wants to do. Now we need to see, is this the end of it? Is this up and down just year end stuff, and now we're just going to go a bit sideways, or does it mean that there is something happening here that we're seeing dollar strength picking up? What does that mean for the Fed? Does it mean, as I said, that we've fully priced cuts now and the market is happy? We're now pricing just less than 150 basis points of cuts for this year, according to several market metrics that price such things. So we've had a lot of moves, obviously, in the dollar. It's hard to think that until we actually find out what the Fed want to do, we're going to be pushing any more extremes in terms of rate cuts unless we see the data really falling out of bed. That would mean a really crappy NFP on Friday, and other data really coming in massively soft. So on that front, as I say, I wouldn't be looking for any more extreme moves on the Fed cut play. We probably are there or thereabouts pricing expectations, and all we're going to do is just shift minutely between the data. So if data's good, then obviously we're going to price out some cuts. If data's bad, we're going to price in some cuts, so on and so forth. But I'm not expecting any huge moves on that sort of thing right now. It's all going to be just treading water until we get to the next FOMC and find out what they do. We do have the FOMC minutes there, as you can see, but as we've heard from every Fed member about 50 times, they tend not to be too explosive in these times right now, but you never know what may come out from them. Right, so all I'm mainly been doing, this is my first day back, so I'm just getting my head stuck in the charts, going over my positions, and just to see if everything's tickety boo. Am I happy to stay in the trades I'm in, or do I need to readjust? I did do a little break trade just before we broke up for the holidays on the break of 110.20. I managed to knock those out 110.50. Just not long after. I didn't want to hold it over the holidays. If I had, I would have caught some of that move, another 100 pips higher. But such is life. Maybe 30 pips. I'm not going to worry about that. But we had this move up again. We thought it might be a bit funky that time of year. We always say it every year. You can't really trust the price moves. We had this move up, as I say, 111.5 nearly, which was a bit of a level. Didn't quite get as high as that, but close enough for government work, as our mate Dale would say. We've had a decent pullback. It's got back under the 110. I would have liked it to have held 110, I'm still long from down in the 105, so I'm still running longs in this one. I would have liked it to have held 110. That would have shown that break would have a bit of legs. There was a reason behind it other than some year-end stuff. But now it looks like that's not the case. We're back down under, and we're slowly chewing through some of the more minor levels. We had this 109.60. We're back through that. We had another minor level there, 109.35.40. We're back under that. Next level is going to be around the big figure 109.10. So we'll keep an eye on that one. And if it keeps going, then we see where it wants to pull up. 38.2 fib of this move is at 108.75, so just around the top of my old zone there. Now this fib I've pulled up. It was originally down there because when we had those moves there, and as you can see, that move when we had the fib around there, if I can line it up properly, give or take. Oh, there we go. We pulled back to the 50 before taking this next leg up. I'm never too keen on adjusting fibs when you've got a big move in the middle like that, because I like a nice steady move up for my fibs. But we need to readjust that somewhat. So now the 38.2 comes in around 108.75. So this is going to be our next gauge for this trend that has made an extension. So if you pull back to there, or the 50, if we hold it again, we might see a similar price action here, and then we carry on legging up. But as mentioned, if we're just talking about central banks, that inflation data from the ECB or from the Eurozone is going to be important on Friday. If that comes in really soft, then it's going to be pretty hard to see the euro rallying up there, because then the market's going to get all cuttified about the ECB. So for now, I'm just going to watch the levels, see where the support wants to come in. Unless we start breaking through these fibs, this trend still remains in play. And this might just be nothing more than a bit of a pullback. And we get to see what happens over the next few sessions. 1 second, folks. Excuse me, I've got a bit of a cold this week, so I have to clear the old hooter now and again. Right, moving on to dollar yen. Again, pretty similar story. We had this big dip down to near the low 140s, a pretty strong bounce coming in at the moment. Again, I'm not going to read too much into it. We've got a bit of traffic here coming into the high 142s into 143 that I'm going to be keeping an eye on. Just on a bit of a cleaner chart, if you want. This move down here, it's still well in play. We've still got lower lows coming in, and we've got lower highs coming in as well. So the trend is still looking pretty strong in that. The 38.2 of this move isn't until 144.70, so a long way to go before we start challenging this trend. That doesn't mean we can't go there, but that's going to be a big area up there and into 145. I'm still short this one, short 143s and up there 145s. 145 is going to be my marker for this one. If we start to get back above that and it's looking a bit stronger, I might have to reassess my position. I'm pretty much playing a Bank of Japan trade on this one, and I finally had to scratch the itch and get in some shorts. I've been slicing and dicing on the way down, so I've got my carry costs covered at the bare minimum, so that's not too bad, and some money in the bank as well. But yeah, I think what we need to see now, as I said, from the dollar side, the US side, I think we're probably pretty much, happy with the market's pretty happy with what it's decided about rate cuts for the Fed. Now it's just whether they come to fruition or not. So really, if we want to see a big leg down in this, it's going to have to come from the Bank of Japan. And I think the market is probably just waiting on final confirmation. We've had enough clues and enough hints that they are looking to ease, and we know, they are looking to tighten, and we know the conditions that will cause them to tighten, or at least end negative rates, and that's higher wages in the spring and whatnot, and inflation remaining high. But I think for dollar yen, the market just wants that confirmation that that they're going to start tightening or ending negative rates, ending the easy policy. I think once it gets a further confirmation of that, we're probably going to get a leg lower in yen pairs, and that'll be the confirmation move. At the moment, all this, apart from the Fed side and on the Bank of Japan side, it's all expectation. Okay, we're trading expectations here for these banks. Expectation that the Fed's going to cut, expectation that the BOJ is going to tighten. So when I get in positions to trade these central bank moves, I want to trade the expectation. That's where you get the big moves. You don't tend to get the big moves when you get confirmation of actually what they're doing. So if the Fed start cutting, we're probably not going to see the dollar dropping significantly because the market will already have priced that. So I'm looking for confirmation that the BOJ are going to end their easing cycle. That will, if it goes according to plan, see us leg lower in yen pairs. I don't know how significant that will be, though. If we get under 140, I'll be happy with that. Maybe down to 135, something like that. That'll likely be good enough for me in that sort of move. Because the big question that comes after they confirm they're going to start tightening is what they do with rates thereafter. Is this going to be a now entering a hike cycle? It's one thing ending easing. It's another thing to properly start tightening. And that's the big question that not a lot of people are asking at the moment. They're all talking about ending easing. They're not talking about how far rates might go after that. And if we know anything from the BOJ, it's not going to be a fast move to tightening. I can't see rates at 4.5% in Japan by the end of this year. Certainly not. So don't expect a hike cycle like we've seen from elsewhere. It's going to be another slow and steady move. But I just, from a position I've got now, my shorts now, I just want to get that confirmation and perhaps a knee-jerk lower. I'll fold a lot of my longs and just keep a piece on for interest to see what they want to do thereafter. Just looking around some of the other pairs, Euro Sterling, and again, just looking at stuff I'm in mostly. This one, give or take, bang in the middle of the range. We've had this range, 85s, 87s, a couple of extensions here and there. It's been that way since, pretty much 3/4 of 2023. I'm not seeing any reason for that to change at the moment. What we may get, though, is some divergence play picking up between the BOE and the ECB. As mentioned with the ECB, we know inflation is coming down lower. Is it going to pick up and keep them on the hawkish slant, rates higher for longer, or is it going to come down below 2%? I think that's the big risk for the ECB this year, the early part of this year, certainly first quarter or two, that inflation will come down quicker than they expect and will go through their target. So I think the risk for them is that inflation goes through their target and then they're panicking on the other side. I can see inflation being a lot more stickier elsewhere, but just the way the Eurozone works with so many different countries, the economic problems we're seeing, I just think they're at risk from seeing inflation coming down faster and getting to lower levels than we might see elsewhere, which may prompt them into rate cuts sooner than others. Which is a negative for the euro, and that goes against my longs that I'm currently holding. So I'm going to be watching this one very carefully into the early part of this year. I'm still long from down at the 85s, but we've not had the big break up that I was expecting when we got through 87s. I thought we might at least get up to tap the 88s and maybe push up 89s, but that wasn't to be. We're stuck in this range. On the other side, the BOE, a lot in the market, and I'm still maybe waiting a bit to see if there's going to be some crunching from the higher rates, the height of rates that we've got in the UK, to see if that's going to put some stress on the economy. We're not really seeing it yet in any of the data. Flatlining growth, but nothing rocking the boat too much, nothing too negative. So I want to see in the early part of this year whether we're going to start to see some of that additional negativity filtering through caused by those higher rates. If we don't, again, that's going to be something that goes against this trade. So if we do see the ECB having to cut or inflation falling faster there, and the UK economy is not crumbling as a lot of people expect, that's obviously going to be see euro sterling falling. That will go against my position. So I'm happy to trade the range for now. And keep trading the range. I would be happy to add back to 85 in the 85s down here if we see it, but depends on why we're down there. If it's because of inflation in the Eurozone coming down and the UK holding up, then I will potentially be looking for flipping any longs that I had into shorts if we got a break this 85. I think if we get a break here, it's going to be significant. So I would look to flip to short on that potential break there and see what it does from there. So lots of things to set up going into the early part of this year. Dollar China as well. That's another one that I'm still short from 736s and happy to stay in this one. Again, end of year stuff pushed us down to 709s. It has meant that we've made another low. So we've got a slight downtrend in this consolidation period, let's call it that. So even though it's going sideways, it is just got a slight downward slant to it, which keeps the momentum going. We know Chinese authorities are keeping the pressure on this still, but the levels are still sticking. So 711, 712 has been my area that we need to get under and hold below. We've tried twice but haven't managed to stay under there. So until we do, it keeps us going sideways. Resistance up into this zone around 717s, and then the next zone up into the 719, 720. So this one again, going to be watching the Chinese data closely in the early part of this year. I want to know what that inflation is doing, because we've had a couple of negative readings. If we get any more like that, it's going to paint a picture of deflation, which may get the PBOC easing a bit more stronger than they have been, which is obviously likely to mean that the yuan will weaken, or at least give them a bit of a headache in trying to keep it from weakening too far. So again, just something that I'm going to need to keep an eye on the early part of this year to see what it wants to do. Are we going to break out of this malaise, or are we set to see it continue for longer? Jay wants to have a look at gold. Yeah, no problem, sir. I'll look at gold. I just want to have a look at dollar CAD as well. I might have missed this one over the holidays. I was looking potentially for a long down into the 132s. 131.80 was a bit of a last line in the sand. We got down there almost perfect. Didn't hold the 132, but we held the 131.80s. We've had a bounce on that. Obviously, keep an eye on what's going on with these geopolitical worries and what's happening in oil. As you can see, we've taken a bit of a leg lower again down in oil. So that's a bit of an influence into why dollar CAD's rallying again on CAD weakness. We're coming down again in oil to some of these low levels that potentially mean there could be trouble. Give or take 66, 67 is the area. Let's just go into a wider chart. We have had a move previously under the 50 fib. I know that some of the guys and girls in our room have got these levels pinned as well, but down into the mid 60s, 61, 62s, that's going to be a big area. The bounce of this move doesn't look overly strong, so keep an eye. If we do have a little breakdown here, that could put a bit more upside influence in dollar CAD as well. But if we start carving through these levels, it could mean that something is brewing and we head a bit lower. This, of course, coming despite continued talk that OPEC Plus are going to continue to support the market. We'll get to see what they do in the early part of this year, extensions and the like. But so far, none of those from the latter part of the year has helped oil at all at the moment. Right, moving on to gold. There it is, just above. So we've had another poke above this. You can call it a triple top, really. We obviously had that big spike move. We've had a little nudge above it, which took us to 89 again. This is one of those things that's come in around the end of year stuff. So can you really believe it? 28th December, end of month, and all that palaver going on there. We can't get a hold above it. We had a little go there, but it didn't last. So this 2075 is still a key level. Unless we get above and hold it, it's hard to see us moving back up and having a crack at these highs again. But that said, it's not pulling back too far for now. We have said the early part of this year, last few trading days, you are seeing it pulling back a bit, but how far is that going to go? If we get down again to 2010, that sort of area, the big 2000 line, hold that again, that will keep the upside momentum in play. So for me, it's a bit of a coin toss what we do here. I think if you're going to trade this one on the long side, you either need to try your dips down into the 2000s. But if that doesn't hold, there may be room for a steeper pullback. If you want to try a break above, then you want a confirmation. You want to see us holding above this 2075, 2080 area on a break. If you get that, then you can perhaps play along off a retest. You don't need to put a lot of money in it, back below 2060, 2050. If you're buying it up here, then the trade is going to likely be wrong. But for me, if you want to go shorts, lean on this line. The more it continues to hold, then it gives you something to lean on. And again, you don't have to give it much. 2085, 2090. If you're short at 75, you don't need to put a lot of pips into it. If you're wrong, 20 pip stop. Maybe stretch it to the 2100 level if your pockets are that deep. So yeah, for me, for gold, it's a bit of a coin toss what he wants to do up here. But that's your big number. You don't need to mess around with it. You've got this top here and you've got this big level down here, 2000, 2010. So that's your trading marker. If you stay above there, you can go with longs. If we stay below there, you can go with shorts and then look to go with a break either side if it gets confirmed. Lastly, going to keep an eye on yields into the early part of this year as well, what they want to do. Obviously, pretty similar picture to dollar yen on this. So a lot of influence from the yield space as usual from here on the dollar. We are mooching around the 4% mark. I think it's going to be fairly significant if we stay below 4%. Just if anything, from a psychological point of view, we do have other more technical levels above 408, 409, but just staying below 4% the early part of this year just tells the market that, the Fed are in perhaps or going to be going into a cut cycle. The market not ready to take yields much higher. We've held the lower levels down here. Let's go into that one, might be a bit easier. My next big level is down at 3.7, which has been a point of prior action when we've been down there. As you can see, up and down, support resistance around the area. So that's going to be my next big level if we get down there. Again, if we are pricing Fed cuts and we're happy where we're at the moment, I don't expect to see any huge moves around here. Maybe a bit of range and a bit of sideways action. Again, swinging on the data, depending on what happens. Maybe we get a push up to even 420. Maybe we get a push down to 370 on bad numbers. But I would expect a bit of sideways action until we get a clear idea what the Fed wants to do in the early part of this year regarding rate cuts and stuff. Brian, you want to look at cable? Well, you know what? I've not even looked at cable today, which is a bit unusual. So let's have a quick butchers at cable. Again, another new high made in that holiday period. So I'm gonna largely ignore that. Still range bound. Got a bit of support down here, as you can see there. We're on the 200 4-hour moving average down there, walking that line pretty well for now. Obviously 2600, 126 is an old level support and resistance area, so we're holding that. Nothing that really should shake the boat on this one. It's really big figure tennis for this. You're either trading off the 126 got the 128s up here, 125s down there, and obviously 127 in the middle of that lot as well. So sometimes cable's easy, just trade between the big figures, and maybe even half figures to keep a clue. But until we break out this 125, 128 range, I don't see any reason why we don't continue to go sideways on that. So it's going to take, as I say, something, either good news or bad news, to make this breakout, be that on the US side or the UK side. So keep an eye on that. But nothing stays tight for cable for too long. So, you know, this is going on since November, when we've been playing this range. So as we know, it doesn't range too tight for too long, old cable. So if you're going to be trading it, as I say, look for a break. There's your range, 125, 128. Play in between or go with a break either side of it. Let's have a look, see what else we can pick out of here. Let's have a look at Aussie. Oh, definitely need to do some redrawing on the old chart, don't I? Let's get rid of that for starters. It's all these dollar pairs are showing a similar position. All this moves into the year end and whatnot, fading a bit now. So the market is getting used to what it needs to trade, what it wants to do with these central banks. Are the RBA going to stay on hold? Will inflation pick up and cause them to hike again? Are they going to start to think about going the other way if the economy is starting to splutter? As you can see, we've got a bit of a zone down here, 67s, mid to low 67s here. Then we've obviously got the big 67 level, which has been a bit of an on-off level as well. So use that as your mark. If we can hold above there, it keeps this momentum going. And then maybe we get another bounce up towards those highs. Paul, let's a quick look at Guppy. I haven't got too much to say about this one personally. Again, it's something to swing around with the BOJ and what's happening in the UK as well. I wouldn't say it's looking strong. I wouldn't say it's looking weak at the moment. It's ranging a bit, as we've seen. You know, this one surprisingly has stayed in a pretty tight range, given what everyone else has done in the yen. Fairly tight range in this one. Again, we saw a bit of positivity over the UK towards the latter part of the year. Market looking to not be as bearish on the UK investment wise as some maybe. So this one looking fairly tight. It's hard to see it moving up significantly with the pressure from the Bank of Japan. So if I had to pick a side on this one, I'd be a rally seller. Even if the fortunes improve in the UK, I can't see that outweighing what happens for the Bank of Japan if they move into a tightening mode. So I would potentially be a rally seller on this one, just on the back of the BOJ play. But, you know, we've got several months until that might happen. So, you know, Bank of Japan likely on hold at their next meeting. Could see some upside in this one. But yeah, go with the flow and the data on this one. But I could probably adjust that fib up to these levels. And I might have to have a little look at that. But we're not even, you know, we had one little move. Well, we've not even had one move down to a 38.2 fib of that. So there's a long way to go in that one. If you compare that to, as I say, dollar yen, which has had a bit more of a stronger move down. It's through its 38.2 fib down towards a 50 fib. Yet Guppy can't even get down to the 38.2 yet, even if I do redraw that one up to there. So yeah, that tells you what the trend is going on, the different trends between the pairs. So Paul, yeah, until you start breaking down here, you can probably, if you look, I don't know what your position for that one, whether you're long or short on this one, but I think a rally sell is probably the best way forward. You might get some mileage if you want to be long. If you trade into this, maybe you get a Bank of Japan meeting spring up if they stay unchanged, because they're kicking everything to spring. Right, no K-Man today, as you can probably tell. He's off today doing his taxi service for his family, so he'll be back tomorrow. We'll have a full complement tomorrow, so I think we'll call it a show today. As I say, my first day back, so I'm really just getting my thoughts together. as to what to look for. And as I said, it's difficult in this first week of the new year just to get a real feel for what's going on, what the market wants to do. But we'll watch that data, see what the market wants to do, and that'll give us an idea how things are going to play out over the next few days and weeks. So on that note, again, Happy New Year. I hope this new year is a spiffing one for you. I hope this week's a good one for you. And we shall catch you all bright and breezy tomorrow. Thank you very much, guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.